Hello, fellow traders from around the world and right here from the Toronto area. Welcome to this week's video, and it's titled, Don't Forget About the Hidden Spread. Now, many traders either ignore the spread or even forget about it when they're trading. It's one of the most overlooked aspects by retail traders. And by retail traders, I mean all of us, me and all of you guys out there. We're called retail traders. So why is the spread so important to some, but not to all traders? And what exactly is the hidden spread? Well, let's find out in this week's video. Hello guys, this is me right here. My name is Martin and I'm your host, mentor, and coach of this amazing new service called ABC Free Forex Signals. And yes, I mean absolutely free. I'll be giving you a little bit more information later in the video. And for you to receive your free signals without any obligation, and remember there's no credit card, you have to send me the information. It's totally free, guys. And if you want to receive the signals, you have to send me an email to this email address. This is mine, mskyj007@gmail.com. Okay, so I'm a proud Canadian trader, guys. I'm always here to help you. And let's start this journey with this video. It's a review of last week's free trade signals and a very important lesson regarding the spread. Okay, so before we do that, I have my humble disclaimer. I'll always show you this, guys. My free signal service is an educational program only. I'm trying to teach you how to trade and not give you any specific investment advice. So don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Remember, for now, you're trading only on a demo account with a maximum 1% risk of your account balance. If you want to trade more, that's fine. Remember, still, we're trading on a demo account, and we're always concerned about protecting our money. Okay, so let's take a look at what happened last week. There were 4 new signals in total, including one here, including one from the previous week from January, that was given out on January 26th. But we did close it this week on February the 3rd, okay? And that was to buy British Pound USD, and guys, that ended up in a loss, okay? So we're going to just have a quick review of that in just a moment. And we're also going to take a look at the charts for these other 4 signals that were given last week. You can see on February 1st, February 2nd, February 3rd, February 4th, right? So these were the actual signals. We had 3 winners and 1 loss. And some of you are going to ask me about this one right here. Why is this a winner? Well, I'm going to explain that as well. Okay, so when we look at the charts in just a moment, we're going to look at the entries, the stop loss, the first profit target level, second profit target level. So we're going to review all of these trades, guys, and hopefully you're going to learn from that. Okay, so with the very first one, just a quick review of the buy British Pound USD. Now, way back here, you can see this vertical line, guys, that was on January the 26th. I issued a free signal. It was a buy, and let me just do something here. So you can see here's the buy entry at 1.3734 right here, guys. And you can see the next day it went down a bit, went up. So I was very hopeful here, went down, up. So you can see basically we're trading on, I just want to use a drawing tool. So let's see if I can get this drawing tool out here. Okay, so we're trading on a range. Okay, you can see price did not want to break above there, and on the lower side, approximately here. Okay, so you can see price was trading sideways, and finally on February the 2nd, I believe it was, right here, see this black candle? It closed below this line. I call this my DTL line, which stands for dominant trend line. And one of my trading rules is when price closes again the opposite direction of past the detail line. So remember here, we took a buy right here. It was a buy, but it closed in the opposite direction below this line. So we automatically close a trade because why? We don't want to lose any more money. Like from here, for instance, well, you don't know. Nobody knows where price is going to go. I mean, from here, price could have gone, you know, down to here, right? And we would have, and even though this was our stop loss, so you can see our stop loss was right there, okay? So we would have been stopped out anyways. But you see, we can't tell and forecast the future. Trading, it can be random at times. And so here we want to trade lower and we want to close the trade. Now, I was hesitant about even closing the trade because it only closed below this line by just a few pips, guys. And I really personally want to keep it open, but I want to stay true to my own trading rules. And you can see what happened the next day. Right here, price went back, and then all of a sudden on the last trading day of this week, we had a huge up candle right back at the top of the range again, almost at the top of our original entry way back on January 26th. So I was actually right. We were in a trading pattern, in a sideways trading pattern, guys, and I still am bullish on the British pound USD. I don't know when, but I believe it's still going to break higher. Okay, so anyways, we did close this trade because of this candle in a loss position. So let's continue, guys, with my next trade. Okay, right here. And we're looking at on February 1st, this was a sell signal I gave you. I said sell the Euro New Zealand. I do, and this, by the way, all this information is taken right from my email. So if you want to receive my free signals, you have to send me your email address so I can send you this information. This is taken right off the email I sent out to all my subscribers for the free signals, guys. And here's the entry. I said sell the Euro New Zealand at 168.45 or better, and better means in case, and we're taking a sell trade, right? So what that means better is, first of all, we're looking for a sell trade, and here's our entry, guys. The entry is 16845. So in case price goes up first, then get in at a higher price and wait for price to go back down. So you're getting in at a better price or a higher price first, and then you're going to sell. You're going to take a sell trade here. Okay, so that's what we mean when I give you in my instructions, better. Okay, and I always give you a stop loss, first profit target, second profit target. Now, on February 1st, I gave you the second profit target here, but I did update that on the next day, on February 2nd. I asked you to raise or move your profit target lower by 12 pips, you can see, to 167.18 from the take profit target. Okay, so I asked you because I knew price was going to come down, but I want you to lower it to get more pips. And the result was a big winner for approximately 125 pips. So we're going to look at the chart now. Okay, guys, you can see here, here's the chart for the new Euro New Zealand on February 1st. I issued a sell signal. Okay, so here's the signal, guys. We're selling right here, okay, and you can see the selling entry was 1.6845. The next day it went down lower and actually hit our first profit target. Here's our first profit target, guys, right here. Our second profit target was given right there. Here, hopefully you can see it on your charts. This was the original stop loss at 1.7038. So after here, guys, price did hit our first profit target. Okay, and on the next day, I basically mentioned in my email update, lower the second profit target by 12 pips. Okay, so from 167.30 to right here 167.18. So to right there, price did go down, went even past beyond that. So it hit our second profit target, and so guys, this was a big winner. Now, once price comes down and hits our first profit target right there, okay, here's our first profit target, then we would move our stop loss right here, 170.38. We would move that to break even, to the break even level or just below that, okay, right there. And so now we're in a free trade for the second half of our trade. And guys, if you don't, I always say open up every trade with two halves, the first half and the second half, one that has the first profit target and the other one that doesn't, to allow your trade to run further. So if you don't know what I mean by two halves, opening up a trade in two halves, with half your lot size, then please go back to previous videos where I described this a little bit more in detail. Okay, so that's important, guys. And so that was a big winner. And now we're going to go to the next trade. And that was on February 2nd. It was a sell Euro CAD, guys. And here again, I give you, if you want to pause the video and read the information, you can certainly do that. But I want to go right to the charts. So I did give you a sell entry at 153.94. Here's the stop loss, first profit target, second profit target. Okay, and I do give you the information by splitting your trade into two halves. You can read that right here below. The result of this trade, guys, was a winner of approximately 64 pips. Let's go to the chart. Sell Euro CAD, and that was on February the 2nd, so it was right there. Now, let's take a look at the entry right over here on this particular trade, guys, and I'm going to use my marker. So here is the signals that was given. Here's the entry, 153.94, which is right there, guys. Here's our stop loss, well above here, above our entry. It's actually calculated 1.5 or 1.5 times the ATR. And again, go back to previous videos where I discuss the ATR. Okay, and then you can see our first profit target level and our second profit target level. So after the entry right here, guys, price did go down but came back up. So here's a bit of a doji, did not go anywhere and certainly did not reach your first profit target. On this next day right here, you see the candle, okay? So that came down, and actually the low of this candle was 153.97, which was a bit lower than the 153.20, which is our first profit target, but it did not trigger the automatic close of this trade. And there's a reason, guys, and it's all due to the hidden spread, which is part of this this video's training, or this video's lesson. Okay, so it's the hidden spread. Now, on all charts, there are two price levels called the bid and ask. What you see in the chart, you can see right here in this yellow line, is the bid. And by default, all the charts, the MetaTrader 4 platform that we're using, they will always show the bid line, but not the ask line. Okay? Not the ask line. And it's because of the ask line, which is always higher than the bid line. The bid line right here came right just below here, but the ask line was still above here. And to close a trade, traders close the trade on the ask level, the ask price level. Okay, so I'm going to have a review of this in just a moment. Now, this next day right here, price again came down much further. You see the low of that candle. There's the low of that wick, and that was actually well below the first profit target of 153.20. So this trade now was automatically closed because we had placed the auto take profit target on our charts. Okay, so it was automatically closed. And again, this was just a really nice winner. Okay, let's take a look. On February 3rd, I sent out another free signal call, and it was the buy New Zealand USD. And here you can see the entry 0.7207 or better. The stop loss, first profit target, second profit target, okay, And again, I give you some more information down below about opening up a trade with 2 positions, half your normal lot size. So you can always stop this video and just read that, guys. And this resulted in a loss. It was the only loss of last week of the 4 signals. And this was a loss of approximately 51 pips. Now, the important thing about this loss is that we contained the loss. And that's always my #1 rule, guys, in trading. Always protect your money. And we protected our money from the loss becoming a much bigger loss. Let's take a look at the charts, guys. On February 3rd, buy New Zealand USD. Okay, and let's use my drawing tool. So here was the signal right here. Our entry was right there. Okay, 0.7207, and I was hoping the price would go higher to hit our profit targets. Our first profit target is 0.7243. Our second profit target you can see right there. And here's our stop loss, guys. And it's always important to put in your stop. So here the stop loss was right there, guys. And if price ever went down to our stop, then we would be automatically out. However, you can see the next day price went back. So instead of going higher, see this black candle right here? Price actually reversed back over our DTL line, which stands for the dominant trend line. Price back closed back over this line. And one of the rules I have is that we always close a trade. Once it does that, once it closes back and reverses back past the DTL line, we want to prevent this from becoming a big loss. And I know some of you in the past have never even used the stop loss. Guys, you should always have a stop loss. So this stop loss is our catastrophic stop loss. But in this case here, the candle reversed back, closed right there, well before reaching this catastrophic stop loss. So we did manage our trade. We closed it early enough and prevented our loss from becoming a bigger loss. Okay, hopefully you understand that. And let's go on. Let's go on to the next one. And let me just get the chart up. Okay, not the chart, but the data on it. Okay, so on February 4th was our last free trade signal of the week. On February 4th, I sent to all my subscribers buy the British pound, Japanese yen. Okay, so here we go. Here's the buy entry, 144.22, the stop loss, the take profit, the second take profit right here, and the instructions down below, guys. And this was this resulted in the winner as well. Approximately only 43 pips. Not a big profit, but again, why did I declare a profit? It actually did not hit our first profit target, but why did I declare this as a profitable trade, as a winning trade? Okay, well, let's take a look, guys. Okay, here is the entry right here on right there. There's the entry. Okay, here's our entry level, 144.22. The next day, price did go up right away, so we knew we were in a winning trade, but it had not reached our first profit target of 144.92. You see that right here? It did not quite. The high of this candle right there, I believe, was about 4 or 5 pips below that. However, I declared this as a winner, even though it did not reach the first profit target. And I want you to think about this for a second. Why? Okay, why did I declare this as a winner? Okay, well, anyways, here's the answer, guys. This candle closed on a Friday, and you know how I feel about keeping trades open over the weekend. I normally don't like to do that. So I did close it on the Friday, and I did not want to wait to see what happened on Monday, because on Monday it might have gapped down quite a bit. You know, we might have lost some pips right there. But you know, I normally do not like to hold a trade over the weekend. And if we're in profit on a Friday, and actually the best profit was like late, I believe late in the or early in the morning or later in the morning. You could have closed it even higher than the close of this this candle here. So I closed my trade. I declared it a winner, and I believe price is still going to go higher. But you know, it's always a good idea to take profits anytime you want, as long as you're comfortable with the profit and you're making enough. But I don't want you to shortchange yourself. I don't want you to shortchange yourself and disallow a trade from going up much higher. But in this case, it was because of the Friday, the last trading day, that I decided to close it. So hopefully you understand that, guys, and we'll monitor this trade. If you haven't closed it, we'll monitor it and see what happens on the weekend, on Monday's trading. Okay. Now I want to get right back to the important lesson of the spread here. And here's some basics. Okay. So whenever you open up a chart, you want to take a trade. Okay. You'll find that a trade is quoted as a pair. In the two names, in this case, we're trading the euro against the USD. You can see that right there, guys. Okay. And we have remember what I said, there's the hidden spread, is which this video is all about, is always revolving around two levels, two price levels. Okay. The lower number is always the bid, the higher number is the ask price. Okay. And when we're taking a buy trade, we're going to be entering at the ask price. Okay, but on your chart, you will only see the bid line. You'll only see this price, the 1.1051. Okay, so I'm going to expand on that thought in just a moment, guys. But the spread, what is the spread? Well, first of all, traders always buy and sell. So if you're buying or wanting to open a trade and you want to take a buy trade or a sell trade, you're always buying the first name in the pair against the second name. So in this case, you will be buying. You can choose to either buy the euro against the USD or sell the euro against the USD. So this is for you newbies out there, but that's how the trading works. Okay. There are two price levels quoted called the bid and the ask. On the charts, you'll always only see the bid line. Okay. And the ask price is normally higher than the bid price. Okay. This level, this price, is the one that you would be getting in on an entry. You would not see that on your charts, guys. Okay. Now, the important thing is the difference between the two numbers. In this case, subtract the lower number right here. Subtract the lower number from the high number. Okay. Or the high number minus the lower number is 2 pips. So the difference is 2 pips, guys. And that is super important because that's the money that your broker makes. You have to pay that to the broker when you open and close a trade. So that is just the basics, guys. Let's continue with that. So here we go, guys. You can see on your charts, prices right here. And let's say we want to take a buy trade. Okay. So if you want to take a buy trade, you're going to enter your trade at the ask line. You see the ask line in blue? It's higher than the bid line. It's the bid line you see in your charts, but you're actually going to be entering right here at the ask line. Okay. And then when you close the trade, you'll be closing at the lower number at the bid line. So when these two lines move up with price, you'll be closing at the lower price level. Okay, so that's really important. Now, if price is going down, okay, price is going down, then and you want to take a sell trade, you're going to pay a lower price. Okay, so you're going to pay the lower price. Okay, which is the bid, and then you're going to close your trade at the higher price level, which is called the ask. Okay, and the reason is the trader always gets the short end of the stick. Again, why? Well, that's because your broker has to make money first, right? You always see you're paying the broker in the spread value. That's how the broker makes their money, okay? And that's the price that you pay to play this forex game. So always remember that when you open a trade, okay, and you're going to pay the spread, and when you close a trade, you're going to pay once again. So again, it just, you know, as a real beginner primer here, if the spread is 2 pips and you want to open your trade with, let's say, a 1 mini lot, okay, which is $1 a pip, then to open a trade, you'll be paying $2 to open a trade and $2 to close the trade, and that is the spread, okay? And if you want more information, you can go online and get more information about bid and ask and how that works. Now, let's take a look here, guys. The broker sets the buy and sell levels known as the bid-ask spread. So and when you open your order window, and you can see the sell and buy buttons, guys. This is what you will see on the MetaTrader platform. So you'll always see this chart. So this opens all automatically for you to have a look at, and you can see that there's 2 lines on this chart, but not on your chart, okay? And the upper line is the ask, because that's always higher than the bid, okay? And you can see here, when you want to take a buy or sell trade, the trader would sell at the bid right here, okay? And when a trader buys, you would buy at the ask, okay? So buy the ask, sell the bid. I know it sounds a little bit complicated, but review these last 3 slides, and you're going to learn it. Now, between the bid and the ask is the difference here. It's calculated in pips. And in this case, the difference between this number and this number is 2.6 pips. So that's the amount of money that you will be paying the broker when you open a trade and also when you close the trade. So this is what we mean by the hidden spread. Always remember that when you will always, when you want to open a buy trade, you will always be paying a little bit more than what the broker originally got, okay? And because the broker wants to make some money, right? Let me continue with the next slide, and this is the last one in this series for this lesson. So on your MT4 charts, by default, you will only see the bid line, okay? And you can see that right here, the yellow line is the bid line, but you won't see the ask line. Now, you can put the ask line on there, and guys, I want you, if you're not, I'm not going to tell you how to do that right now, but if you want a little bit of homework, just Google how to place an ask line on a Forex chart, and you'll see all kinds of videos, and it's really easy to do though, guys, really easy, okay? So, you can do that as part of your homework, and if you still can't figure it out, then email me back and I'll give you the information on that. So, because the ask line is hidden, now remember the ask line will be always higher than the bid line. It's hidden right now on this chart, okay? So the actual spread is hidden, okay? And this is why many traders forget about the spread and how it impacts their profitability, okay? Now, if you're scalping the markets, and by scalping I mean you're trading on very short time frames, let's say the 1 minute, the 5 minute charts, maybe even the 15 minutes, but you know, scalpers like to trade on lower time frames because you want to get in quickly, you want to get out quickly, and you're only interested in making a few pips. So you can't trade this style called scalping unless you know what your spread is. This becomes relevant whenever scalpers open and close a high number of trades. So high spread can significantly lower profits if you're only looking to make a few pips. Now remember, different currency pairs have different spreads. The low volume pairs, which are some of the cross pairs, and some of the exotic pairs will always have a higher spread, and the most popular traded pairs, example the Euro USD, and so on, they're high volume pairs because traders from all around the world are trading them at the same time. They will usually have lower spreads. So it's really important to know the spread of the pair that you're trading. And if you, let's say, for example, you're only looking to make 5 pips, but if the spread is 2 or 3 pips, in fact, when you want to close the trade, you think maybe you're closing your trade with a 5 pip profit, No, instead you have to um, reduce your profit by the 2 or 3 pip spread, and so in fact you may only end up making 2 pips profit. Okay, and then the other thing about scalping, scalpers usually like to take 5, 6, 7, 10 trades a day. All of these trades severely impact your profitability because at every time you open and close a trade, especially the high number of trades, you're paying the broker the spread, okay, in pips. And so these are all pips that are being deducted from your account, and it's called the cost of business, but it's way too much, and so you got to be careful when you're scalping. Now, if you trade on longer time frames, which is what we're doing, guys, we're trading on the daily charts, it's not as important. The spread is not really an issue in relationship to your overall profit potential, and you're taking a lot less trades as well. Okay, so by that I mean when we're trading our style here with the free fork signals, I'm looking for 40, 50, 100 or more pips of profitability. So when you have to give up 2 or 3 or 4 pips to the broker, it's not that important because we're making our profit level is much higher and greater than those traders who are scalping the markets. Okay, so please understand that. Now, finally, beware. Spreads can significantly increase if you're trading during major news impact events, world disasters, near the end or the beginning of trading sessions, and when you're trading minor or exotic pairs. Okay, so generally the spread is low on major pairs where there is high volume trading. So high volume pairs, the spread will be low, and low volume pairs, the spread will be significantly higher. So these are all the considerations, and they all impact your trading, and it's all about the spread and the hidden spread, which you really need to understand. Hopefully you understand that, and send me an email and let me know how I've done. Have I explained the program? Have I explained the process of the hidden spread to you clearly enough? Okay? And finally, we're coming to the end here, guys. My free signals. If you want to receive my free trade signals, you have to send me your email address, because that's how I send my free trade signals. I can't send it out to you if I don't have your email address. So I'll put you on my VIP list, and I want you to send your email with your intent, with your interest in my free signals. Send it right here to mskyj007@gmail.com. Again, mskyj007@gmail.com. Okay. Now, finally, when you send me an email, give me your first name. That's just courteous, and I really need to know your first name. And secondly, if you're sending me an email from around the world, tell me where you're from. Just curious. I'm always curious as to where people live. Okay. And finally, our last slide, and this is me. I'm a happy Forex trader, guys. Cheers from Canada. Don't forget to subscribe and hit the subscribe link below the YouTube video. Hit the bell icon as well. This is how you get the YouTube videos into your email box. Okay, so you have to hit the bell icon, and if you have any comments, send me a comment down below the video. And of course, don't forget to like. When I get more likes, then guess what? It keeps me motivated to keep up this service. And I'm going to see you at the next video next week. Take care, guys. Bye for now.